Welcome everybody. Appreciate having you with us. This is the Waves of Profit, and what we're going to be doing over the next half an hour, 40 minutes, is take you through the program quickly so that you have an idea of how to use it. And before we do that, you may be wondering, how do you get the program? So what we have here is, I'm going to share my screen. I just went over to the tab and clicked on the tab and realized that I wasn't sharing it. So here we go. I'm going to share my screen. Which one is it? That one. And you should be seeing the Waves of Profit /trial.com/trial. So that's where you get it. You run the installation software by clicking here. It downloads it. It's an exe file for Windows, and you can also get the zip file here. We have system requirements, installation problems, firewall solutions. But if you have any sort of problems, just let us know, and we'll be happy to help you with that. Now, this is a 30-day trial, and once the 30-day trial is up, you'll be able to use the software to renew it, but I just wanted to show you what some of the options are going to be. If you have an active Interactive Brokers account, because that is the feed that we use, it's going to be $250 US per month, but we have an annual subscription of $19.50, which is a substantial savings. If you don't have Interactive Brokers account, it's $300 a month because it's $50 a month fee for using their feed, and $3,300 US. Because of course we can't discount the feed. The other thing that we're going to have is we're going to offer private coaching. Steve Wright, one of our coaches, will give you 2 45-minute sessions for $300 a month, and we're going to actually add on so that if you want to have more than 2 sessions a month, you can. We'll be adding that on a little bit later. So that's basically the story. As you can see, we are heavy-duty salespeople. And just to give you an idea, this is what other companies do. They give you all of this hype, and I'm sure it's very good. I actually know this fellow, Ken Calhoun. He's a great guy. There he is. But there's an awful lot of hype, and because he's trying to make you make a decision. And the fact of the matter is we're just going to tell you this is the way you do it. We're going to give you 30 days. Try the program out. If you like it, great. If you don't, no worries, but hopefully this has helped you in your trading career. The other thing I wanted to show you was, this is my other Udemy course, Power Podcasters. I have 2,670 students, 32 5-star reviews. It's a great course. It's a popular course. If you look at us on our stock options trading, we have 56 students, 7 reviews. This is deliberate. We are not going for mass numbers of people using this software. We want to show it to people that are really interested in creating another income or even their main income using options and following our 10% in 10-minute system. But we're not looking at getting thousands and thousands of people on this. We don't feel we can support you properly if we do that. So I just wanted to show you, we have 56 students in this course. We have new students joining all the time, but we haven't gone for masses and masses of students, and we have no intention of doing that. Just like we have no intention of having hundreds of thousands of people use the software anytime soon. So with that, I'm going to stop sharing my screen, and I'm going to turn it over to Alan, and he's going to take you on a quick walk through the software from when you start it up to how you can interpret some of the indicators. So Alan, there you go.
Hey, thanks, Scott. So you said it's a free trial?
Yes.
So I get my money back?
You get all your money back. And actually, you know what? It's not really a free trial because we want something in exchange. And what we want in exchange is a review on the course from you as you've taken. There's also a second course that goes into it in a lot more detail. But we really appreciate you taking a few minutes out of your day to leave us a good review.
Thank you, Scott. Now, I had a couple people email me that couldn't get in, and they tried the second link. Do you have another link you can send me, and I'll just email that to those that want to join in, because there's a few people that are like really wanting to be here today. And,
I'll send that to you in Skype, and I'm actually on the YouTube Watch V, whatever it is, and I'm watching us.
Wow. Yeah, I don't know why it's not working for them, but that's the world of technology. So here's the way the trial goes. Is you know, right here it says 13 days. That's because I installed it a few days back. Yeah, you do get 30 days, and what you get, I'll just quickly cover, and you don't have to do anything except install it, and away it goes. It does all that for you. This is what we call the basic Wall Street. I'm just going to quickly pass it. There's all kinds of information there, but this is meant for long-term traders, and this is where we started out 12 years ago. And you know, there's lists for short-term, long-term investing, all kinds of stuff about sectors. There's a news thing. There's some videos which include some training about indicators, components. It's not as good as the course that we put up. We'll expand all this more also as time goes by. But this is where it all starts, is that you hit the old replay button. Now, when you've successfully proven that you can succeed in replay, then the next thing that comes along is that you want to go to the live version. So the live version is available, and it's identical in its behavior. It has a few extra things which you don't need in replay, but are quite helpful in the live environment. The replay is meant to, it's like the training wheels. You learn things, you play with it, and you get good at it. Then you go to live, but it's a small step between the replay and the live, unlike many other environments where it's like all you get is the live, or you're looking at a bunch of flat charts from the past. Here you get to interact with it. So I'm going to show you the basic element of the replay. So when you click the replay button, the first thing that comes up is this baby here, where you've got about 5 years worth of actual trading days to play with. And all you do is you go in there and you pick a day, and you pick random days. That's what the game button does. But I'm just going to go look at a recent day here and load that up, and then we're going to see how that day looks. And what you get originally or initially is you get a window that looks like that, and I'm going to explain what these columns all mean. I'm going to hide a couple things, so we'll just get rid of some stuff that you don't need right now, and I'm going to make that nice and large, and we're going to go through a couple of them. And oh, here's another person that wants to join in. This is great. So you can see it's divided up into 3 zones, and I'm just going to use the pen here. There's this piece over here, which I'll explain. This is called the short list. Then there's this main chart here, which ends right there, and then there's this other chart at the bottom third. And they all have a purpose, and then there's a bunch of general indicators up here that give you access to things you can, you know, make some changes and so forth. Also, in this case, the current price of the stock and relatively how strong it's been that day. And then this stuff right here is to give us clues about how the market is doing, which is a key important thing to do. So we're going to talk about each one of those. Let me just send this off to this lady who's really wanting to get in, and that's great, but let me get that done.
Alan, I also wanted to say that on the YouTube page, if you put a comment, if you have a question, put it in the comments, and I will be monitoring those, and I'll be asking them. So the system didn't quite work the way we were hoping it would work, but that's just technology. But the YouTube page is working, and if you're on that page, you can leave a comment, put your question in there, and I will pass them on.
Awesome. What are each of these areas, and what are the purposes? Well, I'm just going to move forward a little bit in time, and this is one of the features about this beast here, and that's the importance of it, is you can look at different times in the day to see how the thing went. I'm just going to hide some of the indicators and stuff so it looks a little less cluttered for people that are beginning, because it seems like a lot. But you don't need to worry about all that stuff. It's all good stuff, but learn a little at a time. So this is kind of a very basic chart right now, and this is definitely covered in the second course that's coming out. You get all these details. But here what's happening is I've moved to a particular time of day, and the power of it is, let's just say we didn't tell you anything, and all you had was this program. Then the advantage you'd have is you say, well, okay, I'm going to figure everything out by myself. Not that you wanted to, but what do I get? Well, what you can do is you can go to the end of the day and say, well, I'm going to look at the best performing stocks and see how they behaved, and you can learn stuff on your own. So the first thing we're going to do is you'll see that this stock did really well. It went up a lot. And let me explain now a little bit of what's happening in the bottom area of the screen. So this bottom third here, that is what's been going on for the last 7 days plus today. So today is right here. This is a larger time frame. And why you want to know a larger time frame is it's like, if the tide is coming in or going out, the little ripples, they behave differently when the tide is coming in or going out. And it's like if you've got a big wave coming in, and this is not an example of a big wave, but if you were, let's say, in this day right here, you should be looking more at following the trend which was down. And if you're in a day like this, and there's other days, let me just get rid of some of those lines. If we go look at other stocks, some stocks have been running up for a while, and you'd want to, on a larger time frame, and you'd want to go with them. So like this thing was sort of sideways and then moved up today. If I go pick a stock, I don't know which one has been running in a trend lately. I don't much pay attention to that. But you see, like here, here's another example where Tesla was running down. Well, if you were in any of these days, picking the red side would have been better. So that's the idea, is that this gives you a useful piece of information saying, well, which side should I be on for this stock today? Well, it's pretty clear that in any of these days, if it started going red like here, that the red side would be the safer, better side to go. And if we found some stocks that have been going up, let me go grab one here. This one's been running up pretty nicely for the year. Well, not lately. So, anyways, you can see that some of these stocks have done really well lately, but like today, on this day that I picked, there's other stocks that have done really well for the whole year. I don't have one on my list. Yeah, all the stocks seem to have been fluttering a little bit. That's okay. You get the point, though, is that if something's been running down, you don't want to fight it. If it's been running up, you don't want to fight it. What you really want to do is you want to know about it. So in a case like this, here you can see that this thing ran down. The next day it ran down well. Then it started going up. And so if it's starting to go that way, you want to ride that way. That's the whole point. You don't want to fight stuff. So that's what the indicators are also there for. This one's the MAG line, that blue line that's floating here. That's another one that's right like 90% of the time. So there's a lot of pieces that you want to use. The stuff that has a high consistency, you want to use it in the way it's meant to be used. So in plain terms, is when this thing was running down, you want it to be on the red side. And when this thing is going up, you want it to, and solid line, you want it to be on the green side. And you can see how well it works. And when it's this fluttery business where it's flat, it comes to a dashed line, skinny candles, it's lunchtime, you don't want to be doing that kind of trading. You just want to go with the stuff that's strong. So here you've got dashed lines that say, I don't know which way I'm going, I'm changing my mind. And those are terrible times to be trading. The best times to be trading is when the line is solid and you want to agree with it. You don't want to fight it. So that's the essence of what indicators are, and why we have the two different time frames is the longer one, and then this is today. This is what's going on. And if we go back to the replay with the controller, that's the idea is that you can play blind. So if I go pick some other day, and I'll just go randomly pick another day here, is you can now test yourself with your skill and your rules and just say, well, which side of the line should I be on this stock, which, again, I picked is random. It's like, well, I should be probably on the red side here if I was going to trade this thing. You can tell on the bottom half that it's been running down fairly nicely. This is Apple from, I guess, 2 years ago. And, that has been running down. So which side of the line should I be on? Probably the red side with just that one indicator. That's helping me out. And there it goes. It's starting to go further red. It's reversing. But you can see I'm on the wrong side of the line now. So I should have gotten out. So with other indicators, and that's why you learn one at a time, you say, okay, I'm going to use this piece in that way. It's like, you ever eat soup with a fork? It was Campbell's, wasn't it, way back when, that says, yeah, this is a good idea. Well, yeah, for chunky soup, but mostly you want to use the right tool for the right purpose. So a knife and a fork are really not so good for soup, but a spoon is ideal. And this is what all the indicators do, is each piece has a purpose, and you just use it for that one purpose. So, Scott,
Okay,
what else
so
should we talk about
right
here?
now, you can hear me, right?
Yeah.
Okay. So right now we're looking at Apple. We're looking at during the day, it's 2-minute candles. It'll change to 3-minute, change to 5-minute as the day gets longer. And underneath that, we've got the last 7 days. So we can see, generally speaking, if Apple is going in a certain direction or not. Seems to be a little bit of a downward trend right now at this particular time. And that just adds to our ability to kind of get an idea. If it's looking like over the last week it's been going down, we're probably not going to want to buy stock that's going up. Mm-hmm. The next thing I wanted to ask you to talk a little bit about is what's in the top left-hand corner. We've got a number of stocks there.
Right. So this is the short list. Now there is a long list, and you can, in the live version, you can add more stocks. But in the long list on this day, we've got 31 stocks. Well, for most people, they need a short list, especially when you're getting going. Later on, when you're familiar with all that kind of stuff, just like driving, it's like, well, you know, I didn't want to drive a certain, you know, part of the road because it's too tricky and the road's too narrow. But when you get good at it, it's like, man, I can do that. I can drink my coffee and do all these other things while I'm driving. It's just easy. So the short list is meant to give you a view that, okay, so on this day, Amazon, AMZN, I should be looking for a green move on this stock. And if there's a green move and everything else looks okay, I can probably go ride that thing. And so that's what the DD tells us, is it's the dynamic daily direction. It's telling me, and it changes its mind as the day progresses and the stock proves itself, that I should be looking at the green side or the red side. So there's more of a clue. Now, I know we looked at Apple. You'll notice that Apple isn't on this short list. It isn't one of the better probabilities for this day. The computer figures all that stuff out for you. You don't have to figure it out. So when you're getting started, it's telling you, well, if there's a red run on DD, you might want to grab that. And so let's just move forward a little bit and see if that thing's right. We're going to go forward here. And it already did run red there. But, you know, it's not really, and this is where you get some other indicators that say, well, I need more than just the candle is above or below the mag line. I need to know, that's what the blue line is. I need to know a little bit more. I'm just going to turn on one other indicator. You see here, the only time it was a good run, you had that red tint back there. So that's part of the system that we have. I'm going to turn it off again. So I'm looking for now two things. Which side is going to probably be the better side of the run is one, and I don't want to be on the trading on the wrong side of the line. So in this case, DD, it was telling me I should be looking for a red run. I don't have one, so guess what? I do nothing. And one of the most important things that we have, now it's changed its mind. It says, okay, if you get a green run, because that's the way it's looking right now, you should maybe grab that if you get a signal. I'm going to turn on the signal. It's like, yeah, I have a signal here. It's a little old, but you can see that it's starting to move up. And there it moved up quite a lot. And that's the power of having all these indicators, is I don't have to do a lot of thinking. That's what the computer does. It sits there and without emotional bias, hope, greed, fear, I'm right. The computer doesn't have an ego about it all. Humans, you're born with one, and you struggle with that in your life. That's just the way it is. Here, it doesn't care. It just says, well, you know what? This mathematically looks like it's going to be green is a good side to be on at this moment in time. And so, with just two indicators, the signal color and the mag line, the blue one, I'm being told that plus the DD, which is a third indicator, says, if you get an opportunity to ride the green side, you might want to go with that. So that's the whole point of it, is you just build one indicator on another, and the replay, you go test all this stuff that you say, yeah, you know what, that thing's right, and I should keep using it. But
okay, so let's talk a little bit about what the market was doing right now, because if the market is going down and your stock looks like it's going up, it's probably not going to move up very much because it's going against the grain. So how do we tell easily whether the market is green, which means going up, or it's red, which means it's going down?
Yeah, and that's actually why, and we have lots of other little tools, but we don't need all that other stuff. That's what this business in here is telling me. And if you hover over it, it gives you a clue. But the green background and the wide green bar with a green tint back there, and we explain all that in the course. And if you don't watch the course and you're with us, we'll definitely tell you all that. That's basically telling you that the market is overall tending green, and that's where you don't want to be fighting it. Just like you don't want to fight the mag line, you don't want to fight the market. So if the market is going green and your stock is going green and has a probability of going green, you probably have a better, I know you, it's not probably, you do have a better chance of making money in just riding along in the direction that it's going. So when the market is flat and mixed and it's undecided, well, if you have a strong stock that's going one way or another, great, you can go with that. But if the market's strong, like it is in this moment, you want to ride with that. You'll notice that most of these stocks on the short list, in fact, all of them are green except for one, which is gold. If we go look at gold, let's see how gold's turning out. It's not doing so well. But it was suggested that if you go ride that thing, that probably red would be the better side to go. So any other questions? We've got Steve with us here.
Yeah.
Hey, gentlemen, how you doing?
Good.
Doing good.
Steve's our coach, so I'm glad you could join us. All right, so we've looked at the green tint on the background. Dark green means it's stronger, light green means it's weaker. If it turns white, it means probably not much is going on. You're above or below the mag line. You've got the indicator that shows that the market is going in the right direction. You've got the green on the bold G on the top left-hand side. Mm-hmm. What about volume?
Yeah, volume's very powerful, and there's everybody wants that. I've been doing this for a while, so I hear the same requests, not from everybody, but from most people. Is like, I want to find the long runs, the ones that go all day and do all that, and it says, yeah, you're not likely to find those, but you can, and we don't tell people to go there because they're better off making short profits in short time periods. So my point about all that is that when the volume's good, so here's FAS, when the volume's good, you probably have a better chance of the stock running strongly in the same direction all day. But for most of what we do, and this is getting back to, when people say, hey, I want a stock that makes, 100% every day, it's like, you can do that with options, but finding them is very difficult.
Let's just focus on 10% in 10 minutes.
Exactly, and that's the point, is people go, wow, wow, I can do it. No. So if we go back here to Goldman Sachs, is that one of the better volume stocks today? Well, right now it's had decent volume. And what we've noticed, and I'm going to just draw it here because it happens on different time frames, the beginning of the move is right around here. You'll see this marker down here. That's telling us that this stock had exceptional volume at this time of day versus all its history on how it does things. It's like this is a spike in volume. And we had another spike in volume right here, which was pretty much the end for a time period. So we had a spike here and it had a spike here. So the volume spikes usually mark the beginning and end of a move. So that's the first point about volume. But the second one that's more important is that when you have a lot of volume, that stock has a chance of going a long ways today. So here's FSLR. It's got crazy good volume, but then it didn't go anywhere. And that's my point about is like it's not a guarantee, but when you have volume, you should really be paying attention to see if that thing is going to run. And sometimes it does and sometimes it doesn't. It means you should be giving it attention. So here's Lulu. It had crazy good volume but went sideways. So what do you do with all that? Well, we only need one good trade a day. So if this stock isn't behaving the way we want it to, next. And that's how we have to have our attitude. It's just like if it's not moving strongly, just move along. So here's a stock that did well and didn't have crazy volume, but you see it had a big volume spike here. That's what that pink background is. And then it had another volume spike here. So it wasn't crazy volume, but if we pick other days, you'll see them where they've got big volume and big movement, and that works really well. But there's lots of times, so you go, well, I want stuff that's consistent. Yes, I understand. And that's what the replay is for, is you'll find that there's some opinions out there that work, but when you test it enough for yourself or just look at a few things, you'll find that it doesn't work. So I would suggest that on days where there's big volume, that would be one of the stocks you'd want to pay attention to, but you don't want to get married to it and stare at it and hope and yell at it and say, well, you're supposed to move because you got big volume. Sometimes it will and sometimes it won't. But if it's got big volume, that would be one of the first things I'd look at, the first stocks I would look at.
Okay, so are there any other indicators you want to share?
Yeah, one of my favorites, because this is just purely amazing in my book, and it's on the screen right here, is these blue lines, these blue words and lines like RA, Pivot, and SA, and there's a few others. What I find amazing about them is, yes, they're calculated before, just as the day begins, like long before, you know, it's 10 o'clock Eastern and all that stuff. It's like at 9:30 and 1 second, when the market opens, these numbers are known, not just to me, but to a bunch of professionals that have been in the game for a very long time. And they're saying that at this point, a stock will often bounce and dance around like it did here at that price. And that's why these lines are here. That it'll come, it'll bounce, dance around, and then maybe proceed to the next one. And it happens again and again and again for so many stocks. And I've seen thousands of these. We're just going to look at a few. And so these are, we call our target prices. So we're just going to look at a few here. I'm going to go to the end of the day so you can see how well they work. So here, this one had trouble at the pivot line. Let's go look at another one. Apple. What happened? Well, it had trouble at this pivot line. Let's look at another one. This one here, it bounced off the pivot right there, and then bounced off it again, and then struggled, bounced off of it on the downside, then finally ran up and did its thing. And this is one of the more reliable indicators out there. You see, like here, there, almost there, you know, and here it struggled against that line a number of times. So here's Google. You know, when it broke above this line, then it really ran. And this is the most important, one of the most important indicators we have, is because you're getting an idea. If there's not much room in between these two lines, there's not much chance to make money. It's going to be struggling. But if, like here, you can see it's bouncing off. Let me draw the line here. So this line here you see it bounced against that quite a bit before it continued down. And so if you know that you're on the way up and you're coming close to one of these and you've already made a good profit, it's just time to take the profit and leave. And so that's, you know, one of my favorite indicators. I mean, the mag line is probably the most important because it's such an easy rule. Don't fight it. If you're on the right side of it, just keep riding it. But if you're on the wrong side, so for example, you bought the green and then it starts turning red and you're on the wrong side of the mag, just get out. So you can see here again the pivot. It bounced against it and then struggled and then it continued. And it's not like everything works perfectly all the time, but it works so often that it's definitely worth attention.
And we have one that I call no man's land, and you call something else.
Yes,
Look at that.
Profit Zone, and that one was really helpful. I'm going to go back to like Apple here. So the idea is that, and I'm going to get rid of some of the other stuff, so it's not so difficult to see things. And we'll get rid of the target lines, target prices, and we'll get rid of the volume, and we'll even get rid of the mag line. So that's the bottom screen we don't care about right now. We just want to look at the top. What we've noticed is, and I'll start with a better example where it's a little easier, something that didn't do much. Well, this day seemed to be pretty good. The idea is that when a stock is inside no man's land, this risk area, as I call it, the risk zone, you don't want to trade it. In fact, you're more likely to lose money than make money in this area because as it bounces up and down and all over the place, it hasn't proved itself to do anything yet. The better time to make money is when it breaks out of this and then starts to run, then you go right in that direction of the run. So even here, you have a slightly better chance of making money by not getting in below this area, because quite often the stock will do this kind of stuff and then head down further. And so you have a greater chance of losing money than making it. And we're here to make a profit. So if it breaks above, in this case, this tinted area, and then you're riding along that way, you have a better chance to make money. So I'm going to go back to some of these other stocks that we looked at and just say, well, let's see how that worked again. So in this case, you know, there was yes, you could have made some money here, but you could have lost it too. But here it clearly broke and it wanted to run. It went flat for a while, and that's a clue that, you know what, this move is over. It's not doing anything. If a stock doesn't move my way for like 5 to 10 minutes, and I only want to be in a trade for 10 minutes, if it's going flat and not doing anything, and then the market, you know, this baby up here starts to show green, it's time to leave the trade. It didn't work out. So if we go look at this, and there again would be waiting for signal colors and all that, is it broke above, but then it just lays around and does flat stuff. See, we're looking for it to break and run, and these skinny candles are telling you that there's no like really bad volume behind it, that you don't want to be getting into this trade. Here it's kind of skinny, but there, a fat candle, remember volume? Well, the candle width on these charts is proportional to the volume. So here you had volume, so that was the beginning of a move, and then it took off, and then you'd be done here. Now, we don't recommend trading at this time of day, but we're talking about how the indicator works and how to use it. So we'll just go look at another one. So here, it broke, it came back in, it bounced off the call-only line, which is another one of those lines. And here you got skinny candles and not much is happening. But here, let me just put the marker, you had a fat candle, not super fat, but fat enough, and then you had a run that went off. And, you know, the DD says you should be looking at the green side. Well, okay, I can do that. Gold finally turned green. But you see, it was there was your breakout here. This business in here was just a mess. You don't want it. But when it broke out there, that was good. Skinny candles going back in. Remember what I was saying is like, you know, when it's below here, you don't want to be trading this way because it'll do all this junk, and quite often it'll do that too. It's just a bad thing. And this is too close to the end of the day. We wouldn't do that. So here's Google, bing bang like a pinball machine. Yeah, it breaks out, and we have some other rules that helps you with that so that you don't get caught in this business. But this is often a bounce point, this area here, which is what actually happens a number of times. And let's go look at a couple more. So we use multiple indicators. Like one will tell us, yes, it's ready to go. That doesn't mean it will go. So we use multiple indicators to filter out the crappy trades, because that's the job of all the indicators, is to help us find a trade and to find which ones, although they look kind of good, aren't good. And you can see here again another one of these things that was the same behavior. You had a lot of volume, and then you had a good run. So this market on this day didn't seem to have a lot of good trades in the morning, but had lots of good ones in the afternoon. And I'm sure there were good trades in the morning if we actually went through it, and that's why you've been posting on YouTube, Scott, all these daily things which are almost exclusively looking at this time of the day. There's my square box. We don't care about this other stuff, but if you want to hang around and make some more money, you can do that. But we don't recommend that because it's not as strong a time to make money as in the morning. So I'm sure if we looked at this day, I'm sure we'd find some trades that were good in the morning. But that's the risk zone. I don't want junky moves. I'm looking for something that's breaking out and then wants to keep going.
Right, and that's one of the reasons for the indicators, because it lets us look at trades quickly to decide which ones are ones we need to participate in and which ones we don't.
Yeah.
So talk a little bit about the blue star.
The blue star, oh yeah. Well, that's actually a really cool item. Quite often, and I'm going to go through a list of these guys here, which are not on the short list. Quite often, and this is really amazing, is when this blue star shows up on a chart, that's usually the end of a move for a while. But we use it as if you started in here and you're down here where the blue star is, just take your profit. If you want to do something else, that's up to you. But it works really well. So if you're at the end of the move, so to speak, it's telling you that the end is here long before all this other junk happens. That's why I call it amazing. So if we go look at just a whole bunch of other ones here, where's the blue star? Right here. What happened? It went sideways, and then finally it went on. So that's the one way that we use the blue star, and you can see it happen there too, right here. But the other way is that if you get the blue star and you're the kind of person that wants to hang around, you might find that this thing does another really strong move later in the day. And I have had a few people say to me, well, look, you had the blue star here, and then it kept going. And it's like, you know what, for the number of times that I would have made a little bit more money, it's not worth it. Like, literally, you just add it all up. How many times did I make money? How many times did I lose money because that was the top for a while? And it's about aggregates. Is like, overall, it's better just to always, and that's the point about having rules. I don't have to, well, will it, won't it? Nah. Just get out, get paid. And that's the whole point of this whole exercise. So, if you did get in here and you got out here somewhere in this candle, you would have made some good money. And so we'll just look at a couple more blue stars here. Let's grab this guy. Yep, sure, it went further. You can see it pulled back, but you see, you would have made money in here from the end of the risk zone to here. There was some cash in there for you. Just get paid. This one was kind of flat, took a long time, then it went sideways. Same kind of stuff. Just take your money. And you can see again, this is near the top. Well, that's good enough. I don't need to get the very top. Just close to the top would be nice. So you have two things going on. One is if you had started in here, that's a great time to get paid because you're probably getting the most money. But the other one is that if you get another signal later in the day, you might find that run continues.
So the blue star really does two things. One is it gives you an indication that you might be at the end of the move, And the other one, which is actually like totally different, is you could have a really good strong move in one direction or the other later on in the day.
Yeah, and so what we're looking for is we're looking for it to curve back in here somewhere and then get a fresh signal where it's going to go again. And the beauty of it is if you did get out here somewhere, you can often get in here for the same money or cheaper with less risk, because if you're hanging in, well, lots of times the stock will do that. Well, I don't want to be around for that. Why not just get paid, and then if there's another chance, get paid again? And that's part of our philosophy is we don't know which way the market's going to go, and there really isn't anybody, including Einstein, that can tell you, because he tried. Now here's a day, here's a stock that had no blue star, and
it doesn't show up every day.
Yeah, and it's like, well, did this stock do anything more today? No. Well, tell me it's not true. And this is my classic example of why you don't want to take a trade when it's still in the risk zone. And this is just a random day we picked here, is because it's junk. I want the stock to show me it wants to move, because I'm not pushing the stock. The stock wants to run because other people are pushing it. Here there was no blue star. There was nothing going on with the stock today. And I can show you thousands of these things, or you can find them for yourself because it's all available. There was nothing on this. This stock didn't hardly move. Here's another one from that same day. It's a dead stock. Okay. And I did mention the point that what comes with this one indicator is this business, that's a bounce point, quite likely. Just like this one here is a bounce point. And these numbers are drawn instantly once the day starts.
Right, and actually we had a question on that. Susan asked, are these lines based on historical support and resistance lines? In other words,
nope.
Okay, so how are they?
There is a bit of history built into it, but this is pure math, ratios that are part of the secret sauce of all the development that we've done. But some of these things take years to figure out. So these things just work because other traders, professionals that don't publish. A lot of people hear about high-frequency traders. What they don't know is that these guys are mathematicians that are hired, and there's programmers and all this kind of stuff that do all this stuff, and they're sometimes called quants. And the idea is that they look at models and huge data sets, and they figure out what these things are, and then this is the important part, is they will instruct the computers to start selling when there's certain points come into place. And so all of a sudden the market goes another way because some mathematical model formula gets hit. Well, I'm really good with math and computer programming and all that kind of stuff, and I've done essentially the same thing, but not for some company. I'm doing it for my family and friends, and Scott's encouraged me to say, well, let's go market this, and it's like, well, okay, and so the point is
so what you're really saying is that when you get to a point, whether it's going up or going down, where some institution is going to buy or sell a ton, which is going to cause it to go from green to red or red to green, we know about that in advance, so we can say, okay, we're getting close to this point where it's really, really likely there's going to be a change, so get out before the fire sale happens.
Yeah, exactly. And these formulas here, the SARA and all those on target prices, let me just go bring up a different stock that maybe is a little easier to see it on.
So we got the pivot and the RA.
The pivot and the RA, and we'll get rid of the other thing for now. These formulas, 5 of them have been available and published for about 30 years or more. There's another 4 that are not published that we put in the program because I figured out what they are, because I know how these guys think. And so if we go look at, I don't know, let's just bang through a couple other stocks here until we find some. So there's RA, there's RB and RC. So here you've got SB, SC. So these guys right here, I can't remember which one, but one of them's not published. And so like the RB is not a published formula, but like I think SA is a published formula. And the point is that floor traders, in the day that we used to have them, they would because they knew that the other people were all doing this. That's what caused the market to shift, is the floor traders were all buying and selling. Well, now you got high frequency traders that account for about 30% of the trading volume. This is a big number by a single set of people, like a small group of one classification, the high frequency traders. They're all now looking at similar formulas, not the same, and they're all buying and selling at the same kinds of points, because they know, well, my maximum yield is, if I go from here to here in this period of time, I'm going to make so much money, and that's good enough for me, and I'm out. So what we're teaching you is the same kind of stuff.
Sounds like that 10% in 10 minutes.
Exactly. So
Okay.
the difference is you get to be on the inside.
Okay. Next question is, can you go over the blue line again?
Sure. Let me just turn that on. By the way, with settings, you can turn on and off all this stuff. So I'm going to get rid of all this other stuff, including breakouts and so on. So here is the today, and here is 7 days. And the point is, and if you just look at any of these charts, if I was riding the red side here, and here this blue line, which we call the moving average genius, and there's reasons we call it that, but it's doing some thinking for you more than just a regular moving average. If I was still holding on to my red position here and it's crossing, that's a really good time to leave. And I've seen friends that I was teaching, and some of them have been trading for a long time, and they didn't believe this mag line. And I saw a friend lose $1,000 because he didn't agree. And of course, when it's up here and it's going the wrong way, it's like, ouch! I don't want to leave. Now I'm down $1,000, and it's like, dude, you better get out, because it's just going to get worse. You don't know it's going to get better, but you're on the wrong side of the line, and it's got slope. And that's part of what the mag line does. Is when it's a good trend, you get a solid line. But when it's flat and we don't know which way it's going and it's kind of junky, it's in transition probably, then you get the dashed line that says, I don't think it's such a good time to be in a trade here.
So be green above it and red below it.
Yes, and don't fight it, because it's right 90% of the time.
Okay. All right. So we're getting close to the hour. Can we do just a few sample trades using the buy, sell for the calls and the puts?
Oh, sure,
show
yeah.
everyone how that works.
Sure. So I'm not going to go through the analysis of what I think and all that. We will definitely explain all that as people need and want it. But if we just I'm going to just use the replay, and yes, I know I'm cheating because we're looking at data we already knew. But what the purpose of this is to say, okay, let's say I had a signal. By the way, you can use the arrow keys right and left and move forward in time. So here we are moving forward in time fairly quickly. Let's just say I had a signal here and I liked it, and I thought I want to practice my trading skills against my rules. And my rules said, our rules, whoever rules you want to follow, it says I like it. So all I did was I clicked the Buy Now button. So it puts a little marker on here and tells me when and what price I bought it. This little money bag here, which is on the toolbar, it tells me also that I bought IOC, bought a call, so I'm making money on the way up at 1332. I'm just going to slide that away. So now I'm just going to move forward. You can use these buttons or your arrow keys, and it's telling me how I would have done in the real world on a general averaging system of would I have made money. This has time decay built into it. It's doing all that, taking all that guesswork out. So if you would have put $500 down on the table, you're up 2%, you made $10. Well, that's okay. This is also really good because when you start seeing your $500 dropping down to here, $480 or whatever that is, this helps you cope with flutter, because flutter in the market is real. It doesn't just run up straight. It runs up, runs down a little bit. You get a little bit of chop. So this helps you build, your skills in, well, am I actually making money in this environment? Am I really successful? Not what I think, but what is the computer adding up for me? And do I get out because I got scared? So here I made 8%. Now I'm at my 10%, which is what we try to tell people to get. Just get your 10% and get paid, because you have a high chance of getting paid on 10%. Getting paid on 100% is unlikely. So that's what these.
And I think that's one of the things that is really clear on this particular presentation is there's a lot of stocks, and we've only looked at a very few of them, and not very many of them give you great opportunities. So but the beauty of what we've done is we pick out the ones that give you the best opportunities, and you go with them with the minimum amount of loss.
Yeah. I agree. And anyways, this is where I've had lots of people try this stuff out in the last 2 years, because this was part of our proving period. We're past that now, and part of their independent research that we got is one fellow was using the program last summer, and he was just taking his profit at 10%. He was always doing that, and for 7 weeks in a row, he had successful trades without a losing day. And then he said, I want to make more. So he says, I want to make 20%. And so he would be hanging into trades, trying to push the market to give him 20%. Well, the market doesn't know what you're doing. It's not there for you. It's there for you if you ride it, but it's not going to, oh, Scott's here. What did you want, Scott? And it's personalized to Scott. No, it doesn't care. It's just going to go do what it does because of the high-frequency traders, the big investors, and all that kind of stuff. It's going to go the way it goes. And so when he started pushing for more than 10%, he started actually losing money, because I'll just draw it on the chart here, is in an example like, let's say he got in here somewhere, and he had his 10% here, but he says it's going to go further down. And then it starts going here and going here. Well, now he's at no profit. He's broken even. And now it's like, well, I should probably get out because I'm losing money. I've lost, 5 or 10%. So instead of walking away with a profit here, where this was positive dollars, he ended up saying, well, geez, I guess I better leave. So anyways, there's lots of mathematical curves and stats and all that beautiful stuff that most people don't care about, but that's why it's 10%, and 10 minutes is completely doable, especially during the sweet spot of the market if you pick the right stock, which of course the tool helps you do. Is in the first half hour to hour of the day, there are lots and lots and lots of stocks that move strongly in the morning. And that's why we picked that spot. It's not random. It's not guesswork. And if you want to see the stats, they're all in the tool, and we'll just tell you where they are. But most people, I don't need that. The wheel's round. I'll just stick my key in the ignition and drive. Yep.
Okay, Alan, can you bring up the screen how it would look with all the indicators preloaded that would happen when someone just opens up the program?
Sure. Here we go. If you go to Load Settings, and there is the factory colors. I'm just going to put the colors and settings on. It comes this way, so you don't have to do a bunch of stuff. So this is with all this stuff on, and you can see that before you knew any of this stuff, it'd be like, man, that's just a crazy bunch of. It looks like some mosaic out of an art thing, but there's the blue star. There's the there's the risk zone. Some signal color. The volume. It doesn't take long to learn all this stuff. It really doesn't, especially when you...
Can you go to 11:10 a.m.?
11:10 a.m. I can with this groovy controller. 11:10. I'm just dragging...
That's close. Yeah, good.
There you go.
Okay, and then you can move the controller. Yeah, thank you. So I just wanted to point out now, this is how it would look as you're moving through the day. We're about an hour and a half, an hour and 40 minutes in. You can see it's been in it has not exited the profit zone, or no man's land as I call it. Once it does, you've got the red showing and the little red arrows going down. and on your 60-minute chart, you're also kind of going that way. And you're a little bit red if you look up at the top, 6%. So it might be a good time to get in. So there's one indicator on here that I don't think we talked about. I think that's the K-band.
Yes.
So why don't we talk about that for a minute?
Sure. I'm going to hide the regular signal color. That's the reds and greens. What we found is that this K-band and in this tinting is around the candle so that you can distinguish one thing from another. So there's this bluish tint on the way up. It does not mean buy this. It means you should give it some attention because it's moving very well in that direction. So here, this was an early fast alarm that you should probably give this thing some attention. So when you get the signal color, that's the big one, all top and bottom, and K-band color, and you've got slope with the mag, that's a really positive success ratio. And just with a few indicators, you can, instead of being right, 50-50, you can be right 80% of the time just with these few indicators. And 80% of the time is a big deal. And we've got people, and Steve's on board, he's right about 100% of the time because he's got very stringent rules that he follows. And I've got other people that I've been coaching that are right at least 85% of the time because they have used the replay, practice, and they get it. When this happens and that happens, I'm in. And when these other things happen, I don't get in. And when I get my 10%, go to the beach, whatever you want to do. The rest of the day is yours.
Okay, so we know it's going to go down. Again, it's not we're not cheating here. We're practicing, right? So
yeah.
Bring up the buy the put thing, and let's buy a put and go 10 minutes and see what happens, or
sure
10% and see what happens.
And really, the time you would have got in was here. Because that's our rules. It broke the risk zone, you got the red, everything's looking good.
Would you wait until you went below the 20-day break?
Yes, that would be a safer place to go. So we're going to hit it. We're going to follow Scott's rules here.
Okay. Because a 20-day break means that it has not gone below this price in the last 20 days.
Right.
So everybody knows that, and then some people are going to say, well, it's going to go up, and they're going to push it to go up.
Yeah. Well, because we put a trade in after this, I'm going to have to put reload the day, which is easy enough.
Okay. The whole screen changed on me, and I thought, oh, what did I say?
No, yeah, it wasn't you. It's like, okay, so we're on June 13, 2013, so those that want to play along with us, they can. So I just reloaded the day. I'm going to go move along to the time that we talked about.
11:11 or 11:10.
And we're going to go grab the stock that you wanted, which is that guy. And
so now we're looking at, well, back up a bit.
Back a little bit.
So it's gone below, so you've got a strong red tint in the background. You've got the K-band showing it's going in the good direction.
Yep.
And you've made the break, a good break. The volume is good because the candle is wide. It's it's below the previous low, below the 20. The market is not green. It's not strong. Right, the 60 days is going down. It's been going down for 3 or 4 days. The market itself is mildly red. So, I mean, it's like this and this and this. It broke out of no man's zone. It's below the mag line. So there's like 10 rules, right?
Yeah.
It's like, and you look at, and not all 10 of them have to be like perfect.
No.
But you want as many as possible because really, if you can make 10% in 10 minutes and you can do that once a day for 4 days, figure out the math of where you're going to be in a year. It's not get rich quick. It's like, let's be smart about this. So now we've broken below the 20-day. We're looking at the put only. Oh yeah, you bought it already. Okay, good.
I bought it.
So how many minutes have gone by?
4 minutes.
4 minutes. Okay.
Yep. And by the way, one of my friends right there, which was right there.
Yeah, so we had that bounce back, right?
Right. And so that's where people got to understand the flutter factor. It's like, yes, this is the real market. It does that kind of stuff.
When you're on the beach in Hawaii, you don't have one wave and that's it. You have lots of waves, which means you have highs and lows.
Yeah. Here we are. It's coming back. You're at the 4%, but you see how it's pushing against SB, which I believe is one of the unpublished ones. If it pushes against that long enough, quite often it'll break to the bottom. You can see it's struggling against it, hasn't broken the mag line. Now it broke the line, and it didn't just break it, it smashes it. Tell me there's not somebody out there, you know, acting as support for that price. It happens. So there's your 12%. So that's enough for us to go home. I'm just going to run it out a little bit more so you can see what happens. It's like I don't care to be hanging around. So you got 14% at one point.
Now you're at 6.
There's 14, 13, 17. So, you know, now she's really running because all the support's gone. And now you're at SC in a very short period of time. So it's probably going to have a little bit of trouble with SC. Yeah, it keeps bouncing back to SC again, from the bottom to the top. So, you know, you would have made your money right there.
Okay, so stop for a second. We've made 17%. We had 22%. This is where you start thinking about greed. That we no longer got the strong mag line. We no longer got the red paint. We no longer got the K-bands. We're like, but people will hang in and say, oh, no, like it went, oh yeah, we've got that X. We've had the blue star, and look at the market. The market is now green. So we're now swimming against the tide. And is it worth the stress of the last, are we on the minute, 5 minutes, of the last 20 or 30 minutes? No.
Yeah.
Not worth it at all. Let's do
so
this easily.
If you go, I'm going to take you back to the blue star here just to see how that looked. And see how much you would have made or not. So there's your blue star. Well, you're at 9%.
Yeah.
So, you know, within a minute, you're up to 11%. So, you know, the thing works. That's the beauty of it.
It takes practice and it takes understanding, and that's what we're here to do. We're here to help teach, and we're here to support you in it.
And I keep making it better. You know, and that's the thing. That's why this is a community effort. And people say, well, why are you doing this? Why are you sharing this with people? Because it actually, there's a bit of cost that I pay for the server to collect all this data overnight that people don't even know about. And there's all that other maintenance. But when people feed back what works and doesn't work, that makes the program better. Well, that makes it better for me too. And the other point is that my daughters want to be using this program to trade with. Well, they're not going to want it to be technical and difficult. They want it to be Scotticized, which means that it's been made simple, because that was the driving force that Scott brought in. Is like, can't you make that simpler?
Make it simpler. Add a game. Have a button they can push so we can tell what we're doing.
What's wrong with this, Scott? That's simple.
So Irina had a great question. What are the steps to learn the program? Is it take the course, experiment with the trial version of the program, buy the program, use the replay first, then go for the live feed? And absolutely that is. And you can go to wavesofprofit.com/trial, get the trial, and it's 30 days and work with that. And if you want, I'd actually like to get Steve to say a few words, because he's our coach and he's available to work with you. So Steve, glad that you could join us.
Thank you. I'm glad to be here.
Tell everybody a little bit about some of your experiences with John or Blake or Bundio.
Absolutely. So got into the program a couple years ago, went through some trials and tribulations of kind of the same thing Alan described earlier on one of his other students. Started making money every time, got to a point where I was making a lot of money, then started losing it out of greed. So I wanted something a little bit more concrete, a more refined process. So over a whole year, I came up with a process, a checklist called Cornerstone. And what it is, it's based off of fundamental day trading, simply put, just the things that you need to know and you need to account for when you're doing a specific kind of trading, which is the method Cornerstone. So I had a couple students recently, Blake, John, and Abundio. And we brought them through the program pretty quickly, actually, and on the average, it took them each about 1 week to be able to fix their own mistakes. And it's a checklist-style type teaching methodology, and each one of them was able to achieve 80% or more in 1 week.
Good, that's great.
I can tell you from everything else I've ever seen, it usually takes people 3 to 7 years to get to that level of accuracy.
Yep, it's actually been it's surprised me as well. I was very happy with how everything turned out and how people received the information. But it takes the quality over quantity approach. And I know that we had spoken about the 10,000 hour to mastery type of thing, and really you whittle it down to like what, 20 hours, 15 hours, sometimes 10 for some people. So this just a tribute to the program and all the work you guys have put into it.
Great. So once you get the trial, if you go to Upgrade, there is a link on that page to get some coaching from Steve, and then but really take the program, take the courses, practice a little bit, get Steve on side with you, and then let us know how well you're doing, because we want to hear. So that's it. We're just over our 1 hour time limit. Any last comments that you want to make, Steve or Alan?
No,
go ahead.
I was just saying none for me.
Yeah, I'm really happy that Steve's here because the whole thing about this system is that it is a system. That's what the design is supposed to be, non-emotional. You just follow a bunch of rules, and they're not complicated. They're simple. But that, unlike a lot of other people that have been promoting systems, and I'm not trying to badmouth them, I'm trying to say, I don't care what it is, you got to be able to test it, and test that it works for you. And if it works for you, what have you spent? If all you did was you got the free trial, and you put a bit of time in there, and you got coaching from Steve, and you bought the Udemy course and so forth, you really haven't invested very much money, and you get some really great training for super low cost compared to what most people have out there. No matter what you do, it's really great stuff, and I like that. Like, I didn't know Steve 2 years ago. He's not paid to be here, and he didn't put his butt on the line learning this thing because he's my buddy. He did it because he's got his own vision of, I don't want to have a day job and I want to get out of it and so forth. And so I think he's fairly well on his way to that. And that point is, it's not me, it's other people that are proving that this thing works. And that's really what we wanted to have for this.
That is. We really, it's easy. What happens in our industry is people come up and say, this is what I've done, you can do the same thing, blah, 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 and then they spend $3,000 or $4,000 or $5,000 finding out that the guy uses his intuition and a crystal ball to make his trades, and you don't have his intuition or his crystal ball, and you can't do the same thing. And that's happened to me many times where I've tried and tried. In fact, I would say, if you want to make money in the market, just watch what I do and do the opposite, because I follow all this guy's rules, and every trade I make loses money. And that's what made me so excited about working with Alan, was all of a sudden it was like, here's a way to really test everything for myself and see if it works. And I just think that is so important.
One comment on the price. One of my favorite analogies I think Alan has used in the past is this is a business. It should be treated as such. And what business do you know will cost this little and turn over as much profit? And the answer is there's no business out there that you can learn in 1 week or 2 weeks or however long it takes you and turn over a profit for such a little price. So I just wanted to throw that out there.
Awesome. Thanks for joining us, everybody. I'll put a link to the Waves of Profit playlist, because every day Alan and I get together and we look at a bunch of trades. So it's really a good idea to watch that, because you'll see all the indicators and you'll see us using them on a daily basis. So watch for that, wavesofprofit.com/trial to get the trial version. And once you've got the trial version worked up, hit upgrade and get Steve helping you, because it'll really, really speed up your learning curve. And that's it. Thanks. We'll see you soon. Bye-bye.